So the name of the chapter is capital budgeting. And what is this chapter all about? What are we going to learn in this particular lesson? So when I say capital budgeting, or I say investment decision making, right? What do I deal with in this? There is asset acquisition decisions, asset replacement decisions, which are primarily have to be taken. Now, all these decisions are based on the ability of the asset to generate cash flow. Now, keep one thing in mind as we go along this chapter, which is going to be for three or 4 days, is that the value of any asset, the value of any asset is this is the most important part, is the present value of expected future cash flows. The value of any asset is the present value of expected future cash flows. What is the meaning of this? Suppose an asset generates the following cash flows, comma, assume each number to be at its present value. For all those of us who don't understand present value, don't be scared. We'll talk about it today. An asset generates the following cash flows. Assume each number to be at its present value, right? Let's say in year 1, 2, 3, 4, and 5, the asset generates 10,000, the asset generates 8,000, it generates 26,000, it generates 14,000, and it generates 15,000. What's the total of this? 12 plus 8, 20. 20 plus 26 is 46. 46 and 29 is 75,000. Now, please apply your common sense and tell me the following. How much money is this asset going to generate? How much money will it generate? 75,000. How much money will this asset generate? It will generate 75,000. Keep this much in mind. That's the first thing. Second, maximum, how much will you pay for it? The answer is maximum you will pay 75,000 for it. Will you pay more than 75,000? No. The thing that is going to help you to earn 75,000, you cannot pay more than 75,000 for it. Maximum, how much will you pay for it? 75,000, because it is going to help you to earn or generate 75,000. So you cannot pay more than 75,000 for it. This is concept number 1. I would say this is concept number 2. Sir, then what was concept number 1? This was concept number 1. Most important concept. The present value of the expected future cash flows is the value of any asset. So today when I talk about this particular asset, what is the value of this asset? It is 75,000. How much maximum will you pay for it? 75,000. Why you will not pay more than that? Because it is going to help you to earn only 75,000. You cannot pay more than 75,000 for it. Understood? Is it logical to pay 80,000 for this asset? Yeah, you can. I'm not saying you can't pay 80,000. Pay, then you will be making a loss. Then that's a very Romeo kind of a discussion. You know, Romeo, Laila, Majnu, Devdas. It's that stupidity, that is romantic. It's not business oriented. It has to be business oriented. You cannot pay more for an asset than what it generates for you. Now the question is present value. Now the third most important concept that you will learn is called time value of money. Now focus on this concept. My CA inter students already know the concept of time value of money because they have done it at CA Foundation with me. But my CMA students may not know time value of money because we have not spent that much time together. So I'm going to cut short the explanation for time value of money. Over the next 10 to 15 minutes, I'll be talking about this intensely. It's very important. Please focus on it. Now see, what is the meaning of time value of money? Always remember one thing, money loses value. Why does money lose its value? Because of inflation, interest rate fluctuation, and a plethora of economic factors. Money loses value because of this. What is the meaning of money loses value? What you buy for rupees 100 today, what you buy means quantity and quality cannot be purchased in 100 rupees after 1 year. The value loss of money happens on a daily basis. Please keep that much in mind. Money loses its value on a daily basis. For example, yesterday, 1 kg of cabbage was probably, let's say, rupees 60. Today, that same 1 kg will be rupees 62 or possibly 65. Why is it more expensive? Because of the fact that market forces of demand and supply continuously go in the upward direction with product prices rising. So money is losing its value. I'll tell you a very favorite example of mine that I quote. My school had a canteen, it still does, and the canteen guy has a vada pav ka thela outside the school on a regular day, everyday basis, basically. Now, I have been eating this man's vada pav since, if I'm not mistaken, vada pav was 2 rupees and 50 paise. This was the cost of vada pav when I started eating it. Okay, 2 rupees 50 paise. Today, this same vada pav is 20 rupees over here. How much? 20 rupees over here. 20 rupees. It's crazy. It's absolutely crazy. The taste, the texture, the aroma, the size, and most important, the feeling is the same that it was all those many years ago. Is the same that it was all those many years ago. But what has changed? The price has changed. Why? Because money has lost value. Now, what is the meaning of present value? This is year 0, that means today. 1 year, 2 years, 3 years, 4 years, and 5 years. After 5 years, I will get 5 lakhs. What is the value of that 5 lakhs today? The money that I'm going to get after 5 years, what is its value today? After 4 years, I will get 5 lakhs. What is the value of that 5 lakhs today? Same question. Same question. What is the value today? What is the value of money going to be received after 3 years? Today. After 2 years? Today. After 1 year? Today. This is calculated by using a simple formula which says future value is equal to present value into 1 plus r raised to n. So very important formula. Herein, future value upon 1 plus r raised to n is equal to present value. This is done on a calculator. By using discounting factors. By using what? Discounting factors. So essentially the most important calculation for you in the chapter of capital budgeting and investment decision making are, if I was to put down most important calculations, the first one is obviously going to be present value calculation and second is cash flow calculation. Now what is the second calculation? Is the cash flow calculation. We'll talk about this at depth later. First we need to do this because without PV we cannot do cash flow. Because cash flow has to be got out to its present value. Now, suppose a machine helps you generate the following cash flows. Year 1, 2, 3, 4 and 5. Calculate the value of that machine using a discounting factor of 14% per annum compounded annually. Now, I'm not going to use the word compounded annually again over here because annual compounding, quarterly compounding, monthly compounding, etc., you will not have now at your level. This is done majorly in mathematics. But just to sort of make your life miserable, it is possible that the CMA Institute and the CA Institute might ask you something like compounded quarterly, but that is a very rare thing at this level. So when time comes, we'll talk about it. Right now, it's not needed. Right, the following cash flows are there. So the cash flows are given as follows: 15,000, 18,000, 24,000, 36,000, and 50,000. Now the discounting factor is to be taken at the rate of 14%. Now this is for my CMA students that I'm saying this. My CA students already know how to do this. So please don't be distracted. Everybody will pay attention to what I have to say now. Kindly turn your attention to the screen. Kindly focus on what I am showing to you. This is a regular citizen calculator. Give me yours. This is a regular citizen calculator. A regular calculator that we use, right? Now, the first thing that you're going to do is you're going to identify what is the percentage that is given to you in the question. Now, the percentage given in this question is 14%. How much is it? It's 14%. So, what you are going to press on the calculator is essentially this. You will do 1 divided by 1.14 on your calculator. So, when you do 1 divided by 1.14, the answer that you get on your screen is 0.87719. I believe everybody is trying to do this with their calculators. I believe everybody from CMA is doing this. I expect a response from you. I'm taking it very seriously because without this calculation, you are not going to be able to arrive upon your answers. Are you with me on that? Yes or no? Please tell me that. CMA students, I'm asking you. The CA students who are in this lecture already know
Yes,
how
sir.
to do this. They are really good at it. They are really good at it. I am worried about you. Kindly respond. Are you doing it? Yes or no? Did you do 1 divided by 1.14 on your calculator? Kindly respond. Yes or no?
Yes, sir.
Yes, sir.
Yes. Okay. Now pay attention to the next bit. This number 0.877 something will be sitting on your screen. Now don't press any other button and just press the equal to button now. Press the equal to button once more. Automatically a new value will come on your screen which is 0.76946. Agreed? Press equal to again. What you will get is 0.67497. Press equal to again. What you will get is 0.59208. Press equal to again, you will get 0.51936. What is the meaning of this? The meaning of this is that if this is 5 years, this is today, this is after 1 year, after 2 years, after 3 years, after 4 years, and after 5 years, right? The value of 1 rupee received after 1 year at the rate of a 14% discounting factor, which considers inflation, vagera, everything. The value of 1 rupee received after 1 year, the value of this 1 rupee today is 0.87719. Please understand, what is the value of 1 rupee that you will receive after 1 year? Today, the value is 0.87719. Am I clear about this, ladies and gentlemen? I hope I'm amply clear about this. What is the value of 1 rupee received after 2 years? Your answer is 0.76946. What is the value of 1 rupee received after 3 years? Your answer is 0.67497. What is the value of 1 rupee received after 4 years? The answer is 0.59208. What is the value of 1 rupee today that you will receive after 5 years? Your answer is 0.51936. This is how you calculate the present value. This is how you calculate the present value of money which is going to be received by you in the future. Basically, what I'm trying to say or what I'm trying to put across to you is that पैसा अपनी वैल्यू लूज करता है. तो पैसा अपनी वैल्यू लूज करता है, चलो ये सब जानते हैं, तो बच्चा बच्चा भी जानता है कि महंगाई नाम की कोई चीज होती है. तो पैसा अपनी वैल्यू लूज कर रहा है, तो सवाल ये उठता है कि कितनी लूज कर रहा है, कितनी लूज हुई है पैसे की वैल्यू. तो यदि हम 14% का डिस्काउंटिंग फैक्टर लेते हैं तो 1 साल के बाद 1 रुपए की कीमत 87719 है. मतलब 1 साल के बाद जो 1 रुपया आएगा उसकी आज कीमत 87 पैसे है. 13 पैसे से वो वीक हो गया. 2 साल के बाद जो 1 रुपया आएगा वो लगभग 77 पैसे का है. 23 पैसे से मनी की वैल्यू कम हो गई. 3 साल के बाद जो 1 रुपया आएगा वो लगभग 68 पैसा है. 4 साल के बाद जो 1 रुपया आएगा वो लगभग 5960 पैसा है. और 5 साल के बाद जो आएगा वो लगभग 51 पैसा है. तो मनी हैज लॉस्ट इट्स वैल्यू. देखेंगे तो 5 साल के बाद पैसे की वैल्यू कहीं ना कहीं हाफ हो गई. कैसे? देखो ना, 5 साल के बाद जो 1 रुपया कमाया जाएगा आज उसकी कीमत केवल 52 पैसा है. कहने का मतलब यह है कि आप 5 साल के बाद जो 1 रुपए में खरीद सकते हो आज आप वो 52 पैसे में खरीद सकते हो. आज पैसा वीक होते जा रहा है. जो काम आप 50 पैसे में कर रहे हो वो आपको 1 रुपए में करने को लग जाएगा 5 साल के बाद. आप बोलोगे अरे 50 पैसे के लिए क्यों हो रहा है? तो मेरे दोस्तों याद रखना कि ये डबल हुआ है. तो जो काम आपको 1 करोड़ में आज करके मिलेगा ना वो 5 साल के बाद आपको अभी इस पे 5 करोड़ या जो भी 2 करोड़ लगाना पड़ेगा. कितना लगाना पड़ेगा? 2 करोड़ लगाना पड़ेगा. अब बड़ा पैसा लगने लग गया. 1 रुपए की बात थी तब तक सब लोग बोर होके सुन रहे थे, बट 1 करोड़ की बात आ गई तो सडनली पीपल आर थिंकिंग ट्वाइस अबाउट इट. That's the beauty about time value of money. Now look here. I am going to receive 15,000 after 1 year. What is the value of that today? Now go as per the discounting factor. Now take your calculators and put down 1 divided by 1.14. Again do it. You will get, now I am putting at 3 decimal points, or I can, if you want, I can go to 4. Let's do 4. 0.8772. Press equal to again. You will get 0.794795 ले लो. 7694 ना. एक मिनट. Take it as 7695. वापस इक्वल टू दबाओ. 0.6750 ले लो. वापस इक्वल टू दबाओ. 0.5921 ले लो. वापस इक्वल टू दबाओ 0.5194 ले लो, राइट। तो अगर एक साल के बाद 1 रुपए की कीमत 0.8772 है, तो 15,000 की भैया कितनी होगी? ऑब्वियसली यू विल मल्टीप्लाई 15,000 बाय दिस. What will you get? 15,000 multiplied by 0.8772. What is your answer? 13158. Multiply 18,000 by 0.7695. What do you get? 13,851. Multiply 24,000 by 0.6750. What do you get? You will get 16,200. Multiply 36,000 by 0.5921. What will you get? 21,316. Is that correct? 36,000 multiplied by 0.5921. 21,316. Multiply 50,000 by 0.5194. What will you get? 25,709,970. Take the total of all. What do you get? 13,158 plus 13,851. Come on, do it. What is the answer? 90,495. That is the value of money that this asset will generate. The value of money that this asset generates. Let's make this statement more accurate. It is the present value. Now look over here. 15 plus 18, 33 plus 34. 33 plus 34 is 77, 67 plus 36 plus 50. How much? 153. बिकॉज ऑफ इन्फ्लेशन, जो आपको लग रहा था आप 1.5 लाख रुपया कमाने वाले हो, आपके पैसे की कीमत क्या हो गई? 40,495. क्या हो गई आपके पैसे की कीमत? 40,495. अगर आपने ये 1.5 लाख देख के डिसीजन लिया, इफ यू से machine will help me earn 153, you are wrong. Machine will help you earn present value of 153, boss. And what is the present value of 153? This much. 90,495. So obviously, now tell me one thing. Obviously, tell me one thing. If the asset price, if I was to give you these asset prices, the asset prices, let us say 1,10,000. Will you buy this machine at 1,10,000? Will you buy at 1,10,000? The answer is no. Why? Because the asset is helping you to generate only 90,495. Will you buy at 85,000? Yes. Why will you buy it at 80,000? Because it earns more than 80,000 or 85,000. Because it earns more than 85,000. You understanding what I'm trying to say? Yes or no? It earns more than 85,000. Now, the fact that, always keep one thing in mind. Now, this is the concept, or this is the meat of the matter, that asset will be purchased or replaced only if the present value of cash inflow from new asset is equal to or greater than present value of cash outflow from the new asset. What is the meaning of this? See, when you buy an asset, you buy it today. You buy it when? You buy it today. Suppose if you pay 85,000 rupees for it, the value is 85,000 because you paid today itself. Please remember this. The value is 85,000 because you paid today. आज 85,000 दिया है, तो आज की 85,000 की वैल्यू क्या है? 85,000 ही है. आज मैंने 100 रुपये दिए, तो आज 100 की वैल्यू 100 है. एक साल बाद अगर मैं 100 रुपया दूंगा, तब 100 की वैल्यू 100 नहीं होगी, तब 100 की वैल्यू कुछ और होगी. 2 साल बाद अगर मैं 85,000 दे रहा हूं, तो 85,000 एसेट की वैल्यू नहीं है. एसेट की वैल्यू वो होती है जो मैं आज भरता हूं. तो हमेशा रिमेंबर, व्हाट यू पे फॉर द एसेट, व्हेन यू बाय एन एसेट, you buy it today, you pay for it today. You pay for it today. What you pay for an asset, what you pay for an asset today is equal to the present value cash outflow. Now I will be using this short form a lot. Present value of cash outflow is PVCOF and present value of cash inflow is PVCIF. Am I clear about this? It is PVCIF. I want you to put this in your mind now. So the basic funda is what? If I was to read this statement again, कि एसेट से जो आ रहा है प्रेजेंट वैल्यू, वो ज्यादा होना चाहिए या इक्वल टू होना चाहिए एसेट की वजह से जो जा रहा है प्रेजेंट वैल्यू उसका. कहने का मतलब क्या? Present value of cash inflow should be greater than or equal to present value of cash outflow. If this is the case, then you will buy the asset. Why will you buy the asset over here? There is no loss over here. There is no loss over here. What you are giving out is coming back in again. But if present value of cash inflow is less than present value of cash outflow, you do not buy the asset. Why? Because there is a loss incurred. Because there is a loss that is incurred over here. Are you with me on that? Yes or no? Are you with me here, ladies and gentlemen? 100%?
Yes, sir.
Everybody understands? Alka, Anushka, Alok, Divya, Muskan, Shaili, are you understanding? My question is to the CMA students. Are you understanding? Yes or no?
Yes,
Please
yes.
respond.
Yes, sir.
Yes. So what did we learn so far? We learned so far that the present value of cash inflow, if it is greater than the present value of cash outflow, what will you do? You will buy the asset. The present value of cash inflow, if it is less than present value of cash outflow, what will you do? You will not buy the asset. I hope you are understanding this. I hope you are understanding this. This buy or not buy is your investment decision. What is this? This is your investment decision. This investment decision is based on present value calculations. What is it based on? Present value calculations. So here these calculations entail of two things. First, you have to calculate present value and you have to calculate cash inflow. These are two important calculations. I want you to keep a note of this. These are two important calculations. Have we understood what I have said so much so far? Yes or no? Yes? Okay. The CA students, give the heading in your notebook. First of all, it should be a new notebook. It should be financial management. It should be financial management. And the heading that you are going to give, is time value of money. Capital budgeting. What is the thing you're going to give? Capital budgeting. Please be mindful. किसी का तो ना वीडियो चालू हो गया है by mistake. Yeah. Now I'm going to stop the recording. so that you can copy this down peacefully. Now we have to take certain calculations which are of a basic nature, but they will come for your questions. This is specifically, now see what it is now. For CMA, these calculations will be an MCQ question for you, and for CA, these calculations are adjustments. Okay. Now I'm giving you a question from my own kind of, अपनी जेब से दे रहा हूं, तो अब जरा देखना. Screen is visible to all, right? Yes or no?
Yes, sir.
What is salvage? Salvage means scrap value. Okay, salvage means scrap value. Means you discard the asset. It is basically bhangar. What is this? This is basically bhangar. It is the scrap value. What is the meaning of scrap value? You sell it for that much on that particular time period. The applicable discount factor is 12%. Now decide whether to buy or no. Right? So the black one are the answers, calculations. The blue one is the question. Now the discounting factor is at the rate of 12%. Now for the first year, I want CMA students to answer. Gauri, you have joined late. I can understand. Alka, Alok, Divya is on and off, which is fine. Muskan, Shaili, tell me the discount factor number for the first year. Come on, give me a response. Hurry up, please. I'm waiting.
0.8928.
8.2.
Sorry?
0.893.
0.8928 or 0.893 is correct. I am going to take it to 4 decimals. So I'm going to write down 0.8929. What is the discount factor for the second year, please? Notice this is year 1 only. This is year 1 only. So the discount factor will be same. What is the second year discount factor? CMA students, come on.
0.7971.
7118 is the answer. You have to do 1 divided by 1.12. Press equal to for the first time. First year will come. Press equal to again. You will get for the second year. What is your answer? What is your answer? 7972. Yes or no? What is the discount factor for the second year? 0.7972. Yes or no? Come on, responses. Alka, Shaili, what are you doing?
सर मेरे पास BA
72.
प्लस है तो मैं ये वाला नहीं बता पाऊंगी.
You got to get a regular.
7972.
Yes. For the third year,
7117.
7118 लेंगे, we'll round it off. For the fourth year, come on, answers.
6355.
For the fourth year, 6355. For the fifth year,
5674.
correct? Okay. Inflow, outflow, discount factor, present value. What is the first answer? Come on, answers quickly. Quickly, I want answers. What is the answer? 13,394. Yes or no? Hello.
Yes, sir.
Yes, sir.
2000 multiplied by 0.8929. What is the answer? 1786. Correct?
Yes, sir.
Yes, sir.
But this is outflow, so I'll put it in the bracket. Then 12,000 multiplied by 0.7972. What is the answer?
9566.
8566. Then 15,000 multiplied by 0.7118. What is the answer? 10677. Correct?
Yes, sir.
Yes, sir.
For the third year, what is the answer? 0.6355 multiplied by 20,000. What is the answer?
12710.
12710. Then for the fourth year, it will be 6355 only, but it will be in negative. Correct? For the fifth year, 15,000 multiplied by 0.5674. What is the answer? 8511. Then 5,000 multiplied by 0.5674. What is the answer? 2837. Correct, boys, girls, everyone? Yes.
Yes, sir.
Give me the total,
Yes.
please. 13934 plus minus 1786 plus 9566 plus 10677 plus 12710 minus 6355 plus 8511 plus 2837. What is your answer? The answer is 49,554. Now please check this out. What is the present value cash inflow? 49,554 net inflow. What is the present value cash outflow? It is the price of the machine, which is 50,000. Present value cash outflow is greater than present value cash inflow. Therefore, what is the decision? Will you buy or will you not buy? Come on, CMA. CMA, I want the answer from you. Alok, Alka, will you buy or no?
No.
Shaili, will you buy or no? Muskan, will you buy or no?
No, sir.
Now, please write down the next note that I'm giving you. I mean, I'm giving you time. Now, pay attention. Pens down. Focus. The difference between present value cash inflow and present value cash outflow is referred to as net present value. We call it as NPV. NPV, if it is negative, what is the meaning of that? The meaning of that is present value cash outflow is greater than present value cash inflow. At such a time, what is the decision? Don't buy. If NPV is positive, present value cash outflow is less than or equal to present value cash inflow. What's your decision? You will buy the asset. Is this clear? The first method, this is method number 1 of capital budgeting. This is method 1 of capital budgeting. Right? Now, again, I will stop the recording. You peacefully copy down the question. It's an important one. You can write down basic question 1. What is covered over here? NPV is covered in this question. I want this to be written on your notebooks about the question so that when you are doing your revision, you are able to locate, all the CMA students. I have explained you this in the old recordings. It's not that I have not, but right now I am going to be repeating the concept again so that there is a thorough understanding of what it is. What is the meaning of tax shield? Tax shield is the reduction in taxes paid or payable because you have incurred certain tax deductible expenses. Right? It's the reduction in taxes paid or payable because you have incurred certain tax deductible expenses. We will take depreciation as a base to understand this. Now, depreciation in India is tax deductible under section 32 of the Indian Income Tax Act of 1961. Okay. Now, what happens because of depreciation? Let us see. You have case A and you have case B. Net profit that you have earned before tax, let us say, is 1,50,000 in both cases. Okay, net profit before tax is 1,50,000 in both cases. Less, I'll say depreciation. Let's say depreciation is 50,000 and here depreciation is not applicable. There is no depreciation in the second case. That is possible. Now, what will be your net profit before? I'll say net profit before depreciation and tax, so that both the places when I write net profit before tax, I don't want you to get confused. Before depreciation and tax. Now, what is this? This is net profit before tax. Minus tax at the rate of 30%. What is the difference between this? It is 15,000 and 15,000 is nothing but your expense multiplied by tax rate. What is your expense? 50,000. Multiplied by tax rate is 30%. What do you get? This difference is the fact that due to depreciation, in case A, you paid lesser tax. How much lesser? 15,000. Why did 15,000 come? It came because of that. So now what will be your NPAT, that is net profit after tax? Here it will be 70,000. Here it will be 1,05,000. So this 15,000 is tax paid less. Therefore, it is a saving of how much? 15,000. How 15 came? Expense multiplied by tax rate. I hope you all understand this. I hope everybody understands this concept. Now, the fact that you have such an expense is called as a tax shield. Next is impact of depreciation. Impact of depreciation on calculations. Now, please focus. This is very important. Depreciation is merely an allocation of asset cost over its useful life. Depreciation is a non-cash expense. You don't incur it every year. You just allocate the cost of the asset over the life of the asset, thereby ensuring matching concept in accountancy. It is a non-cash expense, yet it is an expense. Yet it is a tax deductible expense. Please be careful about this. It is not a cash expense, yet it is tax deductible. Now, suppose if I was to say that net profit before Suppose if I was to say that net profit before interest, depreciation and tax, which is also referred to as EBITDA, earning before interest, taxes, depreciation and amortization. It's called as EBITDA. Let us say it is 1,50,000 minus interest on borrowed funds. Let us say it is 15,000. Now what is this? This is net profit now before depreciation and taxation. How much? 135. Let us say now that depreciation and amortization both are the same. Both are the same. Don't get confused. This is given on intangible assets. This is given on tangible assets. They are both the same. Let us say it is 20,000. What are we left with? We are left with 1,15,000. What is this? This is net profit before tax. On this, you will calculate a tax at the rate of 30%. So 1,15,000 multiplied by 30% gets you to 34,500. Subtract this from 1,15,000. How much will you have? 80,500. What is this? This is net profit after tax. Now, this is the profit that you have earned. Please understand this. Profit your company has earned. But since depreciation and amortization are non-cash, you have not really spent cash here. Please understand this aspect carefully and clearly. You have not really spent cash here. If I add back depreciation over here by writing how much? 20,000. 1 lakh. 1,05,000. What is this? This is the cash you have earned. Keep this much in mind. So net profit after tax and cash net profits may not be same, and depreciation is one of the factors for that. Sir, why are you saying one of the factors? There are various other factors we don't need to discuss right now, like collection from debtors, etc. For capital budgeting, we need present value of net cash generated. Please keep that much in mind. What do we need? We need present value of net cash generated. So, what is it that you are going to require? Net profit before interest, depreciation, tax minus interest minus depreciation is equal to what? Net profit before tax. From net profit before tax, you will subtract tax. What will you get? You will get net profit after tax. To net profit after tax, you will add back what? The depreciation. What will you get? You will get cash generated. What will you get? You will get cash generated. This cash generated, you will convert it to present value. Once this is converted to present value, what will you do? You will calculate net present value. What is net present value? Present value cash inflow, that is cash generated hashtag, minus present value cash outflow. In this, you will get NPV. If NPV is positive or nil, what will you do? You will buy the asset. If NPV is negative, what will you do? You will not buy the asset. I hope this is clear for everybody. Yes or no? Please tell me that. Yes, guys?
Yes.
Yes. Easy, not very difficult, but of course, yes, very, very important concept. Of course, yes, a very, very important concept. Kindly. Oh, the recording was stopped. So it's okay, not a problem. We'll take it at our speed. that 60,000 will be recovered after year 3, but before year 4. Hence, it is 3 years plus some months. I hope you agree with this. It is 3 years and plus some months or days or whatever. Now, in year 4, you have recovered how much money? 15,000 rupees. This is 12 months of performance. What is the balance to be recovered? Is equal to cost minus already recovered. What was the cost? It was 60,000. What have you already recovered? Year 1 plus year 2 plus year 3. What is the total of all of these? The cumulative value over here 55,000. What is this? Year 1 plus year 2 plus year 3. I hope you agree to that. So how much have you already recovered? You have recovered 60. You have to cost is there and 55 is to be recovered. Therefore, what is the balance to be recovered? 5,000. Now I am saying 15,000 is earned in 12 months. 5,000 in how many months? So 5 multiplied by 12 divided by 15. What is your answer? Exactly 4 months. What is your answer? Exactly 4 months. Somebody will say, sir, tell me in days. Okay. 5,000 is earned in 360 days. Why? Or you can take 365 also. That's fine. So 15,000 will be, 5,000 will be earned in how much? So it is 365 multiplied by 5 divided by 15. So it is basically 365 divided by 3. Your answer is 122 days rounded off. Is this clear? Somebody will say, sir, tell me in weeks. Okay. 15,000 is earned in 52 weeks. So this was months. This was days. And this is weeks. So 5,000 will be earned in how many weeks? 5,000 multiplied by 52 divided by 15,000. What is your answer? 17.33. So 4 months wanted to do this, but 3 years plus 4 months. Always remember that. So 3 years plus 4 months or 3 years plus 122 days or 3 years plus 17 weeks. So this is how it is. So 4 months is how many years? 4 divided by 12, right? It is 4 months. See, 12 months is 1 year. 4 months is how many years? 4 divided by 12. What is your answer? 0.33. So this is 3.33 years. This is 3 years and 122 days. This is 3 years and 17 weeks, which can be written as 52 multiplied by 3 plus 17, that is 173 weeks, right? So this is your months calculation, this is your days calculation, and this is your weeks calculation. You can do whatever is asked in the exam, whether they are asking in months or they are asking in days or they are asking in weeks. Now, what is the difference between discounted and undiscounted? Simple, when you are going to be doing the undiscounted one, ladies and gentlemen, what you will be doing is you will be taking the present value. What you will be doing is you will be taking the present value. Now, how to take the decision? Now, in the decision, remember, when you are comparing two machines, when comparing two assets or machines or whatever, what is the objective? The objective is fast recovery of funds. What is the objective? Fast recovery of funds. So fast recovery of fund means payback should be as low as possible. Correct? Why? पैसा जल्दी वापस चाहिए. पैसा जल्दी वापस चाहिए. Keep this much in mind. Right? So I have machine A. The payback period for this is 3 years and 4 months. And I have machine B. The payback period of this is 2 years and 9 months. You will say it's actually not much of a difference. It's just a 7 months difference. But what will you do? This is faster. So you will buy this machine. You will buy this machine if decision is based on PBP. If decision is PBP based. In capital budgeting, what should you do? Suppose there are multiple options. Suppose there are multiple options are there, right? First of all, you screen them on basis of NPV. Means what? Select only positive NPV options. Now, suppose there are A, B, C, D, E, F, G, H. Right? Over here, NPV, positive, negative, positive, 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 negative, negative, positive. So who will you select for the next selection round? You have to buy only one. So A is selected, C is selected, D is selected, E is selected, and H is selected. Now do the payback period. Now in the payback period, out of this, what will you select? Select lowest one. This will never be asked to you in the exam. Ki how will you apply two methods? But I am teaching you how you should be thinking like a CMA and a CA. So I am teaching you applications of NPV and PBP simultaneously. This is a concept. So first of all, use NPV, right? Use NPV to get the positive ones. Then out of this, select the lowest one if you want to do it. If you want to use NPV and PBP. If you want to continue with NPV, out of A, C, D, E, and H, obviously select one with the highest NPV so that you have the highest amount of recovery. What is NPV? Obviously PVCIF minus PVCOF. So remember, for NPV, always higher the better. And remember, for PBP, always lower the better. We have finished two methods in today's conceptual discussion, NPV and PBP. Tomorrow morning at 11 o'clock or at 10:30, CMA batch 2 will be having a lecture. I have told you afternoon also you might have lecture. But tomorrow 11 in the morning, the lecture is there itself. Okay. So don't worry, you will have a long day tomorrow. So CMA batch 2, please keep in mind you have a long lecture tomorrow, quite possibly very, very long. So I need you to be attentive and know that you have to attend in morning tomorrow. Okay. Now I am stopping this.